Stock market daily chart review for September 27th, 2022. We see the Nasdaq rose 0.25% today. S&P down 0.21%. 10-year treasury yield up 5 basis points, getting pretty close to that 4%. Gold up by 0.15%. Bitcoin down 0.31%. Oil up 2.48%. Risk in the market increasing. Wow. Here I started graphing this Mannarino market risk indicator back in August 29th, and we see this when I started graphing it, it was already in the high, but it was in low highs, right? 210. Right now we're up here at 281. So in a relatively short amount of time, the risk has really been increasing. I think this risk indicator has been around for maybe 2 years or so, roughly right around there, getting close to 2 years, somewhere in there. And at first it was down here in the green, and it's been pretty accurate, and that's why I'm watching it. That's why I'm graphing it. That's why I'm bringing it to you, because it's something that's been helping out with me. So we see risk elevated in the market. S&P 500, you see on our big long-term trend chart here. S&P 500, where can I put this at? Oh, I don't know. Yeah, let's put it right there. On this Pro 2 chart, money is still flowing out, indicated by this red candle there. You see that weekly stochastic going down. Volume, selling volume bumped up today. You know, this is a 15-minute chart, and I haven't really been paying too much attention to it when I'm talking to you with these videos. But here's 1 day, here's 2 days. So this candle right here is made up in here. I mean, you could do it 1 minute increments, you can do 5 minute increments, you can do hour increments, whatever, right? This is a daily increment, this is a 15-minute increment, and there's all these little 15-minute increments that make up. So we see it started up higher, sold off a little bit, rallied up, sold off, then kind of went sideways, sold off, and then kind of went sideways, rallied up a little bit, sold off just a little bit, and went sideways. So you can see opened here, right? Opened right here. Had that rally up early in the morning, but definitely was not able to hold it, and it just sold off. And if you happen to be, you know, like excluding dollar amount, right? But let's just look at candles moving. You know, this would have been a decent day trade to the downside. Again, excluding dollar amount, like you probably need quite a few shares on there. Maybe not. I didn't really look at the dollar amount, but nonetheless, you can use 15-minute candle for day trading. So our daily stochastic, maybe it's going to be moving up. Got a similar thing going on with technology still. We just been to the downside. You see that. You can see that there. We got this big stochastic moving down weekly. Kind of going sideways, hitting up against this. More selling volume coming in. This has been a change over the last couple of days, right? Because money started flowing in to the healthcare sector. But we see today and yesterday, money starting to flow out, and we see more money flowing out. This is probably a red candle. Sometimes it's color dysfunction here, right? So massive amount of selling volume coming in, this candle engulfing that one. Maybe we're going to see some more to the downside. Same thing with consumer discretionary. Money had been flowing in, starting to flow out, moving down. Down day, massive amount of volume compared to the past X amount of days. Real estate, continue to see this downward trend. See it over here, see it there. Really increase in the selling volume with barely any tail on that. Financials increase in that selling volume today, and turned green for a little bit, but now it's just money's flowing out, starting to flow out. Looks like pretty drastically, right? Got a nice downward trend. IWM still in this downward trajectory, money flowing out. Kind of looking similar, where it's like opening. All these candles have kind of been looking like this, opening here, you know, having this wide range of trading, but the body still negative in this increase in volume of selling. Qs we see continuing down, sort of similar, traded up, hits that resistance, and traded lower with just about average selling volume. Now we add this one. This is the dollar represented by UUP. You can see here it is this dollar trust. Some people use a Dixie. I don't think the Dixie is in the system for this these pro charts. So pro charts and don't have the Dixie. Whatever, you know. It's not a institutional platform. This is for the everyday man. But it works really well for the everyday man. And we see the dollar has been rising up. Right? So certain things, like what does that indicate? You know, sometimes I would say sometimes, maybe not all the time, or maybe it's all the time, whatever. When the value of the dollar is going down, things priced in dollars seem to be going down, right? So maybe we're seeing some of that. Maybe sometimes what happens is people start selling equities and start putting it into treasuries when you got the interest rate on treasuries going up. And not just people, usually like big institutions. This really tends to be correlated with precious metals also, which even though we had a run up in precious metals, had a tiny, even though we had a increase in 10-year treasury, had a little tiny increase in precious metals. So that is interesting. Oil, you know, I just love that 6 month, but wow, I keep bringing it back down here to see it better. Oil, okay, maybe oil is making a base. We're still below this 82 line here, which some of the oil related and energy related stocks that I follow had a bit of a sell-off, and for me, I'm going to be looking to buy some of those at certain prices if they go down to as low as that I want. Gold still looking a little negative, right? Because look at all this buying volume coming in, but we're down here, we're still in the bottom end of this range, all this to the upside, and the selling just brought it in. I personally like gold and silver to prices to drop. You know, if you really like something, why would you want to pay more for it? So that's me. Bitcoin. Let's take a look. We see this big picture trend, right? Have been going down. It likes to do this down, sideways, down type of stuff. And we had a nice rally to the upside. Right, had a really big rally here, but look at selling just brought it back down here. So we're basically kind of going sideways at this moment, right? Even though there was this really big up, couldn't stay above. And I think we were talking about this yesterday. Is it going to keep closing above this whatever 20,000 or wherever it was at when I made this video? And the answer is no. It's back down below 20,000 to the point that you know, 1987 is not too far away from high 18,000s. And so again, whoop, look at that. Frozen in time for a moment, but it's still pretty low, right? It's low 19,000s, which getting close to the high 18,000s. So here did it again, got up to this 50-day moving average, got up, broke over this 20-day moving average right here. We couldn't even, we broke above the 20-day moving average, but couldn't stay above it at the moment. So it's looking bearish unless something massively changes. Here is a peek at the same a line chart for the S&P 500, where each line is incrementing a week. Each line looks like one continuous line, right? And we're at a 5 years back. And with this handy dandy drawing tool, I drew this little channel here so we can see what's been going on. Now let's take a look at the max, right? So going back to like 1993, rallies up. During this time, at some time, this thing, quantitative easing, started, and they started putting money, printing money and putting it into the stock market. And we see like this, I think it was from around maybe 2008, maybe that started. Yeah, all right, but it started, dropped off. They had like QE1, QE2, QE3. We had this quote unquote not QE, and they called it something else, but it still seemed to be printing money and buying things, la da da da. And right now they're not really doing that. So when you hear about quantitative tightening, they're not really doing that. And so for a while, you know, like the way that the stock market used to be is things going up on earnings, on fundamentals, things like that. Well, the stock market's been going up on quantitative easing for a while. Now they're doing quantitative tightening, and it seems like the market's been dropping down. Seems like, I mean, it has been. So we see this little channel here since around, when is this? 2000, kind of started around 2021. End of 2021 started getting weak. We had this rally up, and basically since the end of 2021, we started going into this downward trend. Now you see sometimes it breaks a little below this trend, and it breaks a little bit above, but since roughly sometime, basically let's just say around end of last year, beginning of this year, we just kind of been in this downward trend. And at times it breaks above this little trend line, but it doesn't maintain above it. And right now we are here, which we broke below this little point, and at that 365, which is where is that? Daily, we are, you know, we're well below the 200-day moving average. But let's look at the weekly. Where's the weekly moving 200-day moving average? All right, weekly 200-day moving average right here, 358.20. So 358.20. You know, we're nearing this this 200-day moving average, and if we break below that 200-day moving average, then on the weekly chart, then we'll definitely probably be testing this 350, right? And when we're looking to the left, we see this, like, there's little points of consolidation right here. So that's 350. That's really close to 358. And then if it breaks that, it's probably going to be heading down here to this 330, right? And we see when we line up with that 330, happens to be in line with this here. So now we're kind of in the middle of it. You know, maybe we'll get a little rally up. Will it go all the way up to here and then fail? Who knows? You can see in this part it didn't. It rallied up here, failed. So that's the prediction, is maybe a little bit of rally, but until on the daily chart, until we're like, we are closing above the 50-day moving average and then the 200-day moving average, and we're still going to be stuck in this downward trend for a minute. So what should you do? Well, again, if you haven't already, get a paper trading account. Who knows how long this bear market's going to last? In the past, there's been long drawn out bear markets. In the past, there's been long drawn out bull markets, right? When we look at this, here's a bear market from here to here, when was that? From about 2000 to about 2003, so about 3 years. Does that mean it's going to be 3 years? No, but it could go longer, right? It could go potentially go back to look at this one from here. When was this? 2000 February 2020 to lasted about a month. So we're already at like getting close to 10 months now, or debatably getting close to a year. So maybe it's going to go longer. So the point is if you don't already, get a paper trading account, because with a paper trading account you can test out all types of different things and kind of do things a little bit safer, or a lot safer, because you're not risking real money and you can learn. That is what I would do if I didn't have a paper trading account and I didn't have some experience under my belt. So if you do have some experience under your belt, then you probably already know what to do. And you know what to do, whether you have or don't have experience. Go to ihavesuccess.com, put your email information in here, download one or all of these 3 stocks that I sell cash secured put options on. In fact, I got a position open on one of those stocks right now with a cash secured put option. And what I love about selling cash secured put options, when you get that better idea of what you're doing, is that I'm happy to buy these companies at that strike price. Now here's the problem. Here's why you have to have a little bit of experience, because what if you buy and the whole stock market crashes down here and you're significantly underwater? That's why I use a paper trading account. For me personally, certain stocks, like, I don't care if I go underwater, because I plan on owning these stocks if I have to the rest of my life. And there's a way to, between collecting dividends and between collecting premium, what ends up happening is, let's say I buy a stock for $10. Over time of dividends and selling covered call options, I recoup $10 back. And then what happens? Then I have my $10 back and I have stock. So I have 2 things instead of 1. But that takes time, and you kind of have to know what you're doing. You have to be able to weather the long storm, and you have to have the intestinal fortitude to stomach the volatility. I don't know if you have that, so paper trade. Here, cash secured put option selection guide, giving you some framework of how to select stocks that you can potentially be comfortable owning the rest of your life. Stock option Greeks cheat sheet, and 3 underused tactics to transform your financial results. Hey, number 3 on this, if you do number 3 on this, your life is going to be different. It's not easy to do number 3. It is not easy to do number 3. But if you do it, you're going to be happy. You guys have a fantastic day. Bye-bye.